Morning. This is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Okay, the equity markets are off to another rally this Monday morning. You recall last week, as we're coming into the week, it was just all about the NASDAQ. However, NASDAQ hit a new high last week, and also we saw a lot of improvement in the S&P 500 and Dow Jones. So this rally pretty much has become a broad-based rally, definitely confirmed uptrend. If you look at different S&P sectors, you can see even the home builders that were really lagging the group broke their downtrend line last week, and of course this morning we have all the home builders rallying as well. If you take a look at financials, the technology sector, the XLK, is at new highs as well, as is the energy sector if you look at the XLE. Now the financials still have a little bit of work to do. They are the one important sector that hasn't quite participated in this rally, so we'll have to see how that develops. Now, along with this rally, not only is it broad-based in the U.S., we have the Chinese stocks doing very well. If you look at the FXI, it broke out through a double bottom base last week, and still is holding up and is moving higher this morning. If you look at that EEM, the emerging market index, it's also moving higher. So that tells us that this rally is pretty much global and broad-based in the U.S. Now, on this China play, one stock we're actually picking up right now and we're looking, and the name of the company is YY, and the symbol is YY. Now, why I like this company is it's had 7 quarters of triple-digit earnings growth, and it's had about 7 quarters of triple-digit revenue growth. The last 2 quarters earnings came in at about 150%, 169%. Revenues came in at about 128%, 130%, somewhere right around that range. Now the stock pretty much doubled since May, ran from about $20, ran all the way up to $48, corrected, tried to break through that $48 level early last week, and it failed. And it's kind of coming its 10-day moving average, right around the $44 level, $45 level. Now if you can catch the stock somewhere right in there, about the $44 to $48 level, that's probably a pretty good buy. But you need to be aware of one thing. This is a very volatile stock. It can move 10% on you in one day. Now, if the stock were to crash below the $40 level, I'd say the trade's not going to work. That's right about where its 50-day moving average is. So it's a volatile stock. You need to be careful with it, so you need to position size accordingly. Estimates going forward for 2013 are an increase of about 104%. And for 2014, they're expecting earnings to come in at about an increase of 53%. So there's a lot of growth left in this stock, and with the Chinese markets improving, I think that could be a pretty good play. But as always, let price and volume be your guide. And this is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading week.